In 2026, one of the biggest luxury investment funds on earth, the money behind Louis Vuitton, Dior, Tiffany, is trying to buy a fitness race. Not a gym, not a supplement brand, a race where you run and push a sled. The estimated price tag? Up to €1 billion. And here's the strange part. Nobody can quite agree on whether the company actually makes money. By the end of this video, you're going to understand exactly how a circuit training format built in a Hamburg gym became one of the most contested valuations in sports business, and why the answer to "is it profitable" depends entirely on which number you're willing to trust. Hamburg, Germany. A fitness entrepreneur named Christian Totzky teams up with Moritz Förster, an Olympic gold medalist in field hockey, with a simple idea. Not a new sport exactly. A new format, 8 stations, running in between. No qualifying standard, anyone can sign up. The first race draws fewer than 700 people. Nobody in that room could have guessed that inside a decade, this same format would be drawing over 1 million participants a year and catching the eye of the same investment fund that owns Louis Vuitton. Förster has described the early philosophy pretty bluntly. Build a €2 million production on a €200,000 budget. Make it feel massive before it actually was. That instinct, grow the perception faster than the balance sheet, turns out to explain a lot of what happens next. Here's how the money actually works. By 2025, HYROX's revenue had climbed to somewhere between 1.3 and 1.4 billion. 130 to 140 million euros, up roughly 87% year over year. The company's own CEO confirmed a figure close to 135 million to Economic Times. Projections for 2026 put that number above 200 million euros, possibly approaching 300 million, and the participant numbers back it up. Roughly 1.5 million people competing across more than 80 events in over 30 countries in the 2025 to 2026 season alone. So where does all that money actually come from? About 90% of HYROX's revenue comes from the races themselves. Entry fees, spectator tickets, merchandise, sponsorship deals with brands like Puma and Red Bull. The other 10%? Licensing. HYROX certifies gyms as official training partners, over 5,000 of them worldwide, each reportedly paying around €130 a month for the badge. Do the math on just that licensing stream, and it's close to €7.8 million a year, almost pure profit, since HYROX isn't the one paying rent on those gyms. And unlike most fitness companies, HYROX runs its own events. No third-party promoter taking a cut. Full control, full margin. That's a big part of why, on paper, this looks like one of the most efficient business models in fitness. So, is HYROX actually profitable? Here's where it gets interesting. Multiple outlets report a 2025 EBITDA of around 30 million euros, roughly a 20% margin. That's a genuinely impressive number for a fitness company. But trace that number back far enough, and it leads to one place, an anonymous leak reported by Sky News. Every other article repeating that 30 million euro figure, they're not independently confirming it, they're just repeating the same leak. Meanwhile, other reporting citing Fortune says that after 8 years, HYROX still hasn't turned a net profit. Which one is true? Maybe both. EBITDA being positive and net profit being negative aren't actually a contradiction. One is what you make before, interest, tax, and depreciation. The other is what's left after all of that gets subtracted. But here's the real point. HYROX isn't a public company. It doesn't have to tell us. There's no SEC filing, no independently audited number broken out just for this business, sitting in some annual report for anyone to check. We simply don't know for certain, and that itself says something about how opaque the business of fitness as an investable asset has become a €1 billion valuation, built partly on a number nobody outside a trading desk has actually verified. Whatever's happening on the corporate side, someone is definitely paying for HYROX's growth, and it's not the shareholders. In Vancouver, 10,000 people lined up for a race that sold out in minutes. In Nashville, one competitor tried 5 devices simultaneously and still ended up more than 30,000 people back in the queue. Prices aren't fixed either. HYROX uses dynamic pricing. The more a race sells out, the more the remaining spots cost. Across dozens of cities, that median price sits around $143 and climbs from there. In India, entry fees have already jumped from around $70 at the first Mumbai race to over $95 in Delhi. Alongside the price hikes, competitors have been posting complaints about inconsistent judging and worn-out equipment. One YouTube review asked outright whether the event had morphed into an elitist status symbol. And that's before you factor in training. In New York, prepping for a race at a popular HYROX-affiliated gym can run over $400 a month on top of the entry fee itself. A workout that started as anyone can sign up is starting to come with a very specific price of admission. Here's the thing about HYROX's business model. There's no patent on running between 8 stations. Its real protection is a head start, a global ranking system, and a brand people now recognize. That's it. And competitors are already showing up. DECA, backed by Spartan Race, Athex, backed by Adidas, Xenom, founded by HYROX's own former PR agent. Maybe the most telling one, a competition called BTWE, launched in China by HYROX's former head coach for the entire Chinese market. When the people who used to run your operation start building a rival next door, that's usually not a great sign for how defensible your moat really is. By the time this video goes up, a private equity fund backed by the same money behind Louis Vuitton may already own all of HYROX. Not a stake. All of it. And that's worth sitting with for a second. What they're buying isn't just a fitness format. It's a business that's grown almost 90% a year, with customer acquisition that costs next to nothing, and profit margins most gyms would kill for. Whether that engine can keep running at this speed without the entry fees climbing faster than people's patience, or a cheaper competitor eating into the format's edge is the actual billion-euro question. Not whether HYROX is a good workout. It probably is. The question is whether it can keep being a good workout while also being priced like a growth stock. If you've ever paid more for a race entry than you expected, or watched a hobby you love slowly turn into someone else's investment thesis, you already know where this story is headed. Subscribe for more stories about the industries quietly profiting off the things you never actually asked for.